Hello, hello. And everyone's doing well here. So we got to talk about Teledoc. So if you're just tuning in, new to this channel, we like to look at undervalued stocks, utilize intrinsic value calculation, take essentially Warren Buffett's approach, and merge it with Kathy Wood's disruptive tech thesis. Right. So uh, we're talking about Teledoc right now because definitely some stuff has happened. Some stuff went down with TDOC. Right. We saw a big drop, literally $56 all the way down to, as of right now, $35.37. Okay. So in this video, we're going to go ahead and break down why I'm still bullish on the Teledoc stock, but at the same time, I'm going to give you an intrinsic value calculation of essentially what the market is looking at right now. Just very clear, the market's short term right now. They don't care about whether this is the future, whether things are growing and it's going to end up. This is just a hookup of a quarter. If you're not scoring top notch of a style of a earnings report, then you're done, right? So get a drink. I got a nice cappuccino here. Relax and yeah, let's get into this. So get a drink here. So let's first, though, before we get into this, I want to just give you guys some perspective because unfortunately, if you talk to the average retail investor right now, they're like really pissed. They're really mad right now. And what I want to do is I want to open up here and take a look at this. So this is the smart money and dumb money confidence spread, right? So remember in a couple days ago, we were like literally diverging. We're right there and right here. And I was like, oh, hey, looks like the market's going to be tumultuous and smart money's about to get in. Now, again, there's a lot of big bulls have left, but smart money is still dominating. So as you can see here, let's for people that don't know what this is, like, well, what am I looking at? So this is smart money and dumb money confidence spread. So the blue is smart money, and the dumb the red is dumb money. I need more coffee. So SPX, as you guys know what that is. Every time the stock goes down, unfortunately, dumb money sells. Right, retail sells at a loss. Okay, so retail gets emotional, maybe because they've invested more than what they can afford to lose, or invested more than what they can afford in a situation, let's say, if it's an emergency fund. That's why you should never invest everything you have. You always keep an emergency fund. So, like, think of it this way. If you had a dollar in Teledoc right now and it's down, to down to 50 cents, do you care? No. So that's how it should be like when it comes to your portfolio. And I know that's harder said than done. There's a lot of psychology and many years in the market. You got to kind of have that. God knows when I first started, I was never like that, right? It takes time to build that up. But as you can see, your smart money's going up. But who cares about smart money? Look at retail. Dude, retail is so wrecked with their sentiment right now. They're psychological phenomenon. They're questioning the very existence of them deciding to go into the stock market. And it's literally right there. Now, we do see a little reversal. I do see a reversal there. Who knows? Maybe you see that little nick right there? Maybe they're going to be coming back. But guess what? We also see a nick right there too. So they might be coming back. And unfortunately, smart money already went in and took them those short shares. So those very discounted shares. But we're going to walk you through some Teledoc right now. So this company's been around here based off of these fundamentals here, the revenue, which is the money coming in, not the bottom line, since 2013. Okay, they had $20 million, and as you can see, they literally doubled their money after a year, and then so on and so forth. They got into a point where the last year they hit around, $2 billion. Again, these numbers are in millions. And then now we're expecting them to get around $2.4 to $2.5 billion at, let's call it, 2,450, $2.45 billion. Now, again, their prior forecast was 2.55 to 2.65 billion. All right. So you can see here they're off, right? And again, like I told you, if this is consistent, I told my Discord group, our private Discord group, if this is consistent, then, maybe we got to reevaluate. But based off of this projections, we're going to implement this data for 2022. Then we're going to go ahead and calculate what crazy Wall Street thinks and what long-term value investors think. Okay. So I'm going to go here real quick. Let's go ahead. So TDOC and Clover neck and neck. Tell me what you mean by that. I mean, they're both in the healthcare. Telemedicine is going to fail. Oh, really? You have to see a doctor in person, just my opinion. I don't think so. So, man, I hope we got a couple doctors actually in our private Discord group. Global minded, if you're here, definitely, if you can comment on that one. I don't know. He's probably in the hospital right now working. No, I don't think telemedicine is the future. We're heading to the fourth industrial revolution. In the future, surgeries are going to be operating remotely, and we're already going through that technology. But I don't think so. I am in the healthcare field, so I do see the advancements, and it's going to be amazing. But going back to the fundamentals here, if you look at Teledoc and look at the gross margins, they were doing pretty good. Then all of a sudden they slumped, but then again, they're building themselves. But look at the gross margins here. 2020 was 64, 2021, 68. So they're improving. They are becoming from this range. They are becoming a better, more efficient company. Now, if you look at the operating income, my apologies, the operating margins, it was negative back in 2013. It was negative 29. Negative 34, then negative 72. I bet you in 2015 was a really bad year for Teledoc. So actually, let's go to 2015, right? Was that 2015? Yeah. If you go to 2015 here, see, look at that. Then it took, Wall Street and everyone to realize it's crap. Then it literally went from $32 down to like freaking $10, $9. Literally dropped insane. And because essentially it started to get to a point where things weren't looking too good for it, right? So let's go a little bit more into you see then the free cash flow went from negative 13 to negative 55, and I was like, oh my god, 2015 was crazy. But look at that, they did grow crazy after that to 2016. So as you can see, the operating margins went from negative 72 to negative 45 million, negative 26, negative 15, negative 13, negative 38, negative 11. It is slowly getting more efficient. And guess what? If you look at the free cash flow is 130. So let's just go ahead and just take this revenue here and multiply it by 5%. You get 101 right here, 101.65. I don't know if you can see that. It doesn't. I hope you guys can see that up close. For me, I can see it, but I don't know if when I'm streaming, they have 130. Obviously, this is an efficient company. So in this calculation, we are going to give you the bear, like the Wall Street, the roof is falling. Sell your shares. This is just garbage. We're going to ignore, this is what I was talking about on our Discord channel. We're going to ignore what they've done in the past. Screw all the hard work they've done. I don't care, right? And I'm going to focus on right now. So by doing that, we're going to go in and do Yahoo Finance. Okay. And we're going to do TDOC. And then I'm going to jump to here. So I did not trade this today. How was it? Give it to me. Can you feel a lump on the neck through a video screen? Well, it depends. No, okay, that's going to be inappropriate. I was going to say a joke, but so this is why we have a patient history and physical. We can assess that by taking the history, and then if things get to a point where you do need to get a physical, then essentially you can go to that level. But if you're going through a common cold, common symptoms, usually a history is sufficient. In fact, enough to get you to a diagnosis. And that's what I've been taught at medical school, right? So that's why it's important to sit down with your patient and get time to speak with them. And it's that communication that that patient gives to you that you can arrive to a certain degree to a differential diagnosis. And from there, obviously, you don't want to be too specific and too zebra or too specific, a pretty narrow probabilistic high probability outcome differential diagnosis. Then you can go in and if, let's say, for example, if it is a lump, then you want to go ahead and get it, biopsy and all these things and that, all that, and then you go down the healthcare system. But overall, a lot of it could be done through the camera, right? So, all right, but I understand what you're saying, right? But that's from my perspective. I'm just some guy on YouTube. You take what I say, put it in the trash, and don't even put it in your trash in your house. Put it in the trash outside. You know what I mean? That's just my perspective. And it's good. It's good to exchange perspectives because that's that's a beautiful part about the internet, right? It's a beautiful, dangerous but beautiful thing. If you're not strong mentally, it's tough. You know what I mean? Now so revenue estimates. So we're going to do the sky is falling for Teledoc. We're going to be like, we're going to give you an intrinsic value calculation. We're going to ignore what they've done in the past. We're just going to talk about today. So all we're going to do is we're just going to take this number here. What do they expect them in 2023? 23.6. Okay. So we're going to go in and we're going to put the growth here, 23.6. Okay. Then we're going to go in and take the free cash flow of 130. We'll drop that in there. We'll use what they have here. Okay. And then we're going to go in and take the shares outstanding, which is 157. Now, what does intrinsic value calculation does? It goes 10 years into the future, discounts back at a 10-15% discount rate, utilizing a perpetuity model of 2% divided by the number of outstanding growth rates. So by taking that, you get a 157. These are your price targets for Teledoc. Anywhere between $25.94 is the bear case, and $35 base case, and $50 bull case. But wait, I don't agree with this. This is just taking in what they expect for the future of Teledoc. Now, if Teledoc essentially keeps doing, crap like this, this is true, which is why the market is forward-looking, right? This is why. And the base case is 35. And if you go to the Teladoc stock right now, you can see right here, $35. If you guys, let me highlight it right there, $35. You see? So maybe, and this was an update. This wasn't updated today. So if you guys want, for the people that are in our mastering stock market course, you can go in and talk and look at other what analysts are thinking and do these types of calculations in anticipation if they, let's say, hit a miss. But overall, for long-term investors, they don't do such of the things. Okay. But just very quickly, for people that don't know what the hell I'm talking about, for this calculator that we have here, and we're going to go ahead and do the actual calculation, is our intrinsic value calculation in our mastering stock market course, which will be in a link down below. And the testimonials for the Al Stock Alerts and the mastering speak for itself. But enough with that. Now we're going to go in and pretty much go in with the actual calculation. But just before we do that, I do want to let you know on something. We just got sponsored on our channel. There is a platform. I recommend doing it after. It's called Mumu. I've looked at it. It's actually really good. You can get 6 free stocks very quickly. If you open up the account, you get only one, right? If you deposit 100, you get another one. That's 2. If you deposit 2,000, you get 3. Now that's 5. And if you deposit 5,000 and take their hard quiz, you get a freaking free Apple stock. Yes, Apple. And the cool part is you get free level 2 data and short selling data, which is really cool. And their AI monitoring and education tools and all that good stuff. And they actually have a customer service line, so you can. And they're always up. I've been talking to this wonderful lady named Jenny. Very, very nice lady. But if you guys are interested, hey, it's free freaking money. So yeah, anything I can. I've been getting a lot of sponsorships on my email. They're all crap. They all want your money. This is giving money, so that's good with me. And it's actually a good platform. I was looking through it, and I was like, oh my god. So I'm actually I might consider diversifying my portfolios across, because if you're a trader, very quickly you want to basically have multiple sets of cars, because if one car stops and you got to get to work, which is, that's if you're a day trader or a swing trader, that's your job. Like sometimes, like for example, Robinhood can crash. Webull one time crashed. Thinkorswim crashed, and you got to have these different types of platforms to, like make sure you do your job. All right, so there's that. Now we're going to do the intrinsic value calculation based on, so I'm going to reset this. All I have to do is just hit re-enter, and it resets. And now we're going to do this calculation from their actual numbers. So I'm going to take this here, and I'm going to open it up on another window so I can, be able to work. So we're going to go here, and we're going to be doing 2013. Okay, in 2013, they made $20 million. And again, it says net income, but again, it's not profitable. So we can use and get away with revenue, right? So they made 20 million, and it was at 2013. Now, we're expecting them to make anywhere between 2.4 to 2.5 billion dollars for 2022. So we're going to put 2022. We'll take the halfway point, 2.45 billion. Again, these numbers are in millions. So now they're from all this that they did, and they've been growing amazing. They've just been killing it, right? Where they're expected at around 71%. Okay. Now hold on. You got to take 2022 minus 13. But an easy way to do it is just take 22 minus 13. That's 9 years. So you got to update this to 9. Okay. Then you get your free cash flow, and again, they're free cash flow positive, right? They just went from, for 2020, they went from a negative to positive. And again, they've done that before, but this is a really huge positive number. $130 million in free cash flow, pretty impressive. Okay. Then you put that, and that's the number of outstanding shares. I put it in the wrong box. It's 157. 157 for the number of outstanding shares. The free cash flow goes here. And again, doesn't matter what year you put it in, it just takes the average. So then this is the calculation for Teledoc. So this is the calculation. So the bear case is $312. The base case is $442, and the bull case is $667. Now hold on. 71% is a pretty challenging way of wanting to grow, right? So we can make another assumption, which is more conservative. The more conservative you are, the better. Let's assume that overall Teledoc starts slowing down, okay? And let's say we take 70, they can accomplish 75% of that 71%. So what we got to do is take 71 times 75%. We're looking at 53.25. Let's call it 53. By doing that, the price targets drop. We're saying, you know what? Let's say if they can accomplish 75% of their growth rate that they've done, then the price target goes anywhere between 125 as the bear, 174 as the base, to 260 as the bull. And if you want to go ahead and look at the bear, and apply a 20% margin of safety, you can go in and say 125 times 0.2, which is 25. Subtract it from that is 100. I went ahead and I said, in my Discord, anywhere between 90 to 95. And I just took an extra discount rate on that one just to make it a little bit more conservative. But anywhere between 90 and 100 is what it's worth based off of very conservative calculations. But like I stated here, I don't know, was it 71% here? Anywhere between 300-ish to 680. And as you can see, that almost looks like another Tesla, doesn't it? Which is why Kathy Wood is banking on that. You can see from the numbers, right? And for where the science is headed and where we are in terms of where medicine is going, it makes sense. So let's go ahead and read the comments here. Take a drink, relax, and let's see. Working on a remote surgical robot surgery, I believe. And yes, we already have some surgical robots, actually. I've helped write an academic paper on one that should be published soon. Take a picture of your hemorrhoids and send it to your doctor. You'll be billed $1,600 by insurance. Thank you. Thank you. Uh, oh, that's nice. I love you guys. TDOC is 7% position and it's got absolutely demolished. Absolutely. Absolutely. Well, I'm actually curious to see what Kathy Wood is going to be doing. Now, just a quick shout out. This is our private Discord channel. It has a bunch of AIs. So, like for example, if you want to do like a DCF of Teledoc, all you got to do, and this is our brain machine. It's a proprietary leading edge market analysis utilizing machine learning algorithms in the stock market, and it's powered again by our stock trades, which is our platform, right? So if you let's say for example you say Al DCF TDOC, you can see the DCF here is $65, right? It's a little bit more conservative, and it's hard to implement this type of master calculator that is so humanly needed input to do this. But this is a kind of a nice one to get you kind of like, oh, hey, this might be a stock I want to do more further analysis on. And again, there's a lot of things that you can do here. Like for example, if you want to, like here, someone was looking at TDOC from the hour here. Even if we go on the week, it's dropped to a significant level, but it graphs you support and resistance lines, right? And they're forward predicting. And if you want access to this, we actually have a 3-day free trial. It's right over here in Al Stock Alerts. It's risk-free, 3-day free trial. Cancel anytime you want. And yeah, you just click on here and you get the 3-day free. But it also comes with all of our AI, and honestly, the testimonials and everything we offer speak for itself. But there's the DCF for Teledoc. All right, let's see. Any questions? I needed to take a look at that. I got to double check. TDOC is down 36. That's neck. Oh, is that what you're saying? Neck and neck. Oh, okay. Yes. Well, I mean, okay. So a good calculation for that would be, we're expecting, I don't know, 2.5%, 2.5 basis points. So for every 100 basis points, it's anywhere between 15 to 20% decline. We'll call it we'll take the average between these things, divide by 2, about 17.5% decline. So if we take 17.5, first off, if we take 250 divided by 100, very simple, 2.5, times 17.5, we're looking at 43.75%. So what the market is anticipating now, it's no longer anticipating 2.5. It's probably anticipating maybe 3.5 in terms of how many interest rates. It's anticipating the Federal Reserve is going to increase more, which is why a lot of stocks now are down a lot, right? So that makes sense. But very quickly though, don't you guys want to see ARK, what she did today? I don't think she posts it just yet, but on our Discord here, we can go learn Trade Master, and we can type in ARK, and should highlight, here it is, ARK, and you can look at ARK's latest buys, and this is under stock. So let's see, that's Kathy Wood's latest buys. So if you look at Teledoc, so here it is. So April 27, today's the 27th. So I don't see any Teledoc here, but she did buy some of these. She bought Teledoc on April 25. She bought 9,800 shares. And again, we have so much in our Discord. It is literally like a Bloomberg terminal. So it's 3-day again. We're trying to democratize financial information. I'm building the software. It'll be rolled out in an app. 3-day free trial. After that's $15 a month, and it's like freaking it's a steal. But yeah, I would love for all my people that are on the Discord channel, if you guys update this, tonight, if I'm not around, keep looking at this to see if it updates. Maybe she bought more. She usually releases it, but as you can see here, she did buy a lot here on April 26. She doubled down on her position and increased her weighted average. So she's down a lot right now. So yeah, that's definitely something that we need to take a look at. Another one that I want to look at is Roku. But that's pretty much what we have here for Teledoc. I mean, I don't know what else to uh, um, talk about besides. I mean, we could take a look at Twitter chatter, see what people. I mean, I'm sure it's up here. No, no, wow, no one gives a crap. Yeah. Let's talk about Wall Street bets. Maybe they TKAT. Let's take a look at that. Yeah, it looks like TDOC is. Oh no, I see it. It's right here. It's right here, but not as much as I. Well, Wall Street bets likes to chase the runners, so that makes sense why it's Facebook here. You said TCAP. Yeah. So speaking about like all these short squeezes and all that, so these are our top short squeeze stocks. We call them out, and what we do is we give them a box here. We give you the market cap, share float, all the way up to the short squeeze score. Beautiful part is we organize in a sophisticated manner where you can take in all that data and look up the top short squeeze stocks. Here's top one, and here's the last one, top 10. And you can see, the market cap here in blue is pretty low, which means that doesn't take much to bring it up. All the shares available, the less it is, the more likely it's going to squeeze. So you can see, HCDI and maybe IO. These are really good ones. Stuff like that, right? So there goes my dog. He's trying to protect the house. Buyout. I mean, it depends. What's the market cap? $9 billion. I don't know. I think it would be a good buyout. Honestly, it would be a really good one. I mean, here's the thing: we're at 54.90. No, not even 54. Let's go back to $35. The last time it was $35 was right around here, February 2018. Okay. So if you look at Teledoc in 2018, you're essentially getting it at levels when it only made $500 million. Now it's going to be making 4 times that, even more. And it's going to be it's free cash flow positive. It is approaching profitability. So, I mean, it's honestly a good bet, I would say. But look at the financial health. Oh, fuck yeah. Current ratio is 3.7. Oh, my God. Yeah. Current ratio means can they satisfy their short-term debt obligations within 12 months? The answer is, of course they can. Warren Buffett likes to look at companies over 1.5. So I wouldn't say they overpaid, because the question is, when you look at goodwill measures intangible assets that essentially it's very hard to put a worth to them, which is why it's very difficult to evaluate software companies like or like a brand. Like, how much is a brand, right? It's an intangible asset. So there are obviously some intangible assets within side of this type of goodwill, which essentially through accounting purposes gets rolled in on which you may have seen the negative $40 billion, in earnings, when in reality it was like less than $1, right? But again, retail doesn't know this. So, this is why you need to understand your accounting, your finance, all of these boring things, but they're not so boring when they're actually important, which is why retail's getting wrecked, right? Getting wrecked right now. I feel so bad. Like it's just so sad. It's like, and it's not their fault. You know why? It's our stupid educational system's fault for not pushing this. They push, x equals the opposite of b plus or minus square root b squared minus 4ac all over 2a, right? They push that, right? But they don't push, how to freaking, do the balance sheet and income statement of cash flows. Don't get me started, but it's just, this country, you make money when the stock goes down, not when it goes up. Okay. So I'm trying to see what else we can look at. Support and resistance levels here. I wouldn't. It goes only back. It goes back only to a certain time. But what we can do is we can go to. We can go back to TradeMaster here and go to TA and TDOC, and we can see what they say here. So the first resistance is 50. Yeah, you see, it's past. It's blown away all resistance. Technical analysis is so far out that is so hard to take a look at this. I mean, we can maybe look at the fib. We can see the fib maybe. That's in the stock charts. And again, this is all available in our private Discord here. Let's take a look at the Fibonacci. Yeah. Oh, yeah. So it's it's in the after hours. It needs to upload for tomorrow. So the system needs to get all that data in, and then it'll go ahead and analyze it. But in terms of short volume, that's actually a good one to take a look at. Let's take a look at that for TDOC. Yeah, so a lot of people are going to unnecessarily short this, and this may even become a short squeeze candidate. Who knows? We got to look at the data there. But we'll double check to see. But yeah, if you guys have any other questions, the cool thing here is we just rolled this out. It's still in beta, but it can do more of the fundamental analysis here. I assume if you go to like price targets here and take a look at TDOC to see if there's any updates on the price targets, you can see, oh yeah, so it hasn't gotten any updates quite yet. I think one person updated it and needs time to get it. But if you look at the average price target, yeah, we're looking at 150 is the high, the low is 67. The target consensus is 100, right around my price target. Yeah, I see. And if you look at it though, on the DCF falls in line with the low value, 65 bucks. But yeah. So I don't know if this is a good analogy, but are you going to learn how to play tennis through a video, or do you actually need to be on the court? That's why I don't like telemedicine idea. Well, it's heavily needed because there is a shortage of physicians. Here's the thing. You got to look at the data. You got to go in and do a meta-analysis and take a look at all of the data of what telemedicine has had an impact on healthcare. And you got to analyze it, and then you go ahead and make your conclusion. Based off of the economic incentives, it's actually very successful. And I think that's where we're headed. I mean, just look at this. Let's pause for a sec. Are you telling me back in the day, people had access to what we have here at All Stock Alerts, where you can just type this in and it can give you anything you want, support and resistance? No, like to have all this information, like for example, to have this AI tell you, hey, NVIDIA, this was today at 6:52. Gets, they're saying, hey, put some puts on Twitter. I don't know why. It's interesting, and it's very confident. So, which is interesting here. Yeah, look at that. Look at that. You know what I mean? And it's able to. We have AIs that basically tell you brainlessly how to play options, and technology is the future. Okay, and I mean, our members and the profits speak for themselves. So I do think tech. I do think tech is the future, and this is very nice. This basically tells you it's. I recommend doing free following with your due diligence, but it's pretty impressive how far we've come from the tech side. But I understand what you're saying. But it is a growing industry, and it's no joke. So, all right. But all in all, this is everything that I have for you for Teledoc. I'm trying to see anything else, but other than that, just make sure you grab your free stocks here off of Mumu. They are offering up to 6 free stocks. Again, if you just open up an account, you only get one. If you deposit $100, you get another one. 2,000, you get 3, and then not when I say 3, another 3, so 5. So if you put in 2,000, you get 5, and all all, and it's the sixth one. Yeah, I got to do 5, and then they give you a free Apple stock if you pass their free quiz. So it's like a no-brainer. You're getting a lot of money, and their stocks go up to $17,000. So it's up to 17 grand. And the perks is you get free level 2 data. Webull doesn't offer that. I think you have to pay like $5 a month. Same thing with Robinhood. They're giving out free level 2. They are even giving out short selling data. You know what I mean? And their APIs are also open. There's just so much great stuff here. And it's a nice little cow. In fact, I have a dog that looks like a Coco. It's like chocolate. It's like black and white. I was like, we just got her. She's a puppy. We're thinking Coco. I was like, hey, maybe I should name her Moo. But then I was like, maybe she can be the mascot for this company. But that's kind of the little joke there. But yeah, here's the I can't copy it here. Interesting. It's freaking out here, my computer. But there it is. If you guys are rewatching it, it will be in the description box below. Maybe I can reset it here. But yeah, that's pretty much all I have for you guys. There it is. So make sure you guys take advantage of this. And then also our Al Stock Alerts has a 3-day free trial. So please take advantage of this and use our software to help you with your trading needs. But overall, this is all I have. In terms of heat map, let's kind of quickly end it with this. Let's see what's going on in the market today. Yeah, so, and this pulls directly, right, from our Discord. And we can see here that, energy was up today, basic. Microsoft's doing well. I thought Facebook was doing well. What happened? Did it come back down? Oh, after hours. It was in after hours. That's why. Yeah, I'm like, I could have sworn Facebook shot up. All right. Well, that's all I have for you guys. I hope that was helpful with Teledoc. It was a little bit long. Hopefully it doesn't discourage people from watching it all. I think it was very helpful to take a look at it because there's a lot of people that are like, oh my God, this thing is, you know what I mean? And at first I was like, let me just calculate the crazy intrinsic value, which is utilizing a 23% growth rate, ignoring all the work that they've done in the past. And that's not fair, right? It's like evaluating somebody on their work performance when they had like a bad 3 months, or when they've been going to your work for the past like 10 freaking years, 9 years. Yeah. But yeah, so I hope that was helpful. And yeah, no, I appreciate that, Adrian. And I hope to see you guys on our private Discord channel. We're giving out a three-day pass because I'm really confident that you guys are going to love the crap out of this. I don't think anything out there exists within a Discord. This will transition into an app. We rolled it out on Discord to compile everything that we believe through research and innovation that is needed in the market to succeed. And again, it's the amount of resources that you have and the edge that they bring you that essentially increase your probability of success in the market. And it's very difficult. I mean, this is tough. I mean, my recommendation is just go ahead, put it on index funds, dollar cost average. For me, I enjoy this. I like looking for the next diamond treasure hunt. I just love that. It just feels good, when you get it right. I mean, it's not even about making the money. It's honestly just finding something of value and knowing that everyone's like, this is crap. But then you take the little diamond in the rough, just kind of clean it up. I'm like, oh, this is very valuable. And then all of a sudden people find its value. And, that's how you make the 10X to 20X multi-baggers, right? So That's all I have to say. God bless each and every one of you, and I'll see you on the next one. See ya.